All right. Now we should be live.
It's not showing up here.
All right. We are live. And I don't know, should we give people a few minutes to join, or should we just get started right away?
I'd suggest we maybe 1 to 2 minutes.
Yeah, let's give it a couple minutes.
Sorry.
All right. So for whoever's joined by now, we're just going to give it one more minute to let more people in, and we'll start after that. All right, I think we're ready to get started. So first of all, welcome everyone to this webinar between Index One and ValuEngine. Today we're going to talk about, firstly, Index One's backtesting tool and a specific use case we've worked on with ValuEngine, which hopefully will be relevant to all viewers here. As a starting point, let me bring out some slides that we've put together for this webinar to give you an idea of the flow. So let me just share my screen, share this window. All right, so what we're going to go over today is firstly an introduction to all of us here. Then we'll talk a bit about Index One, give you some background around what we do, our product offering, talk a bit about ValuEngine, their product offering and the team on board. Then we'll talk a little bit about the portfolio or strategy that ValuEngine has developed, and
Okay, seems like Alex is facing some technical issues. I think he should be back in a minute or so.
Technology is great when it works.
Yeah. So there's this saying, right? So if there's a technical glitch, it finds me.
We could proceed with the introductions for each of us while we wait for Alex to come back in. Should we do that?
Yeah, Paul, I think there's no downside to it.
Okay, great. Okay, so sorry about that, everyone. Alex looks like he had an internet connection. Oh, here he comes back.
Right,
Yep.
back. So not sure where I was cut off, but let's start by going through.
You had just pulled up the slide.
Okay, good. So yeah, let's start by going through introductions from everyone's side. So perhaps we could start in the order. Let me just share my screen again. So this window, and we can go through it in the order here. So maybe Herb, if you can start with a brief introduction from your side.
I'd be delighted. Thank you for having me on this webinar, Alex. I'm a senior quantitative analyst with ValuEngine. I've been in the industry since 1980. I have been doing quant factor analysis, back testing most of that time. A lot of people know me as the first portfolio manager in the United States of ETFs. I've been very involved in that area, also ESG factors and back testing and testing there. Quantitative analysis, joined ValuEngine 4 years ago. Very, very happy there, but I've known Paul and ValuEngine for many years and was tickled pink to join it. And with that, I'll turn it over to Paul. Unmute.
Right.
Paul, unmute.
There we go. Sorry about that. Yep. Okay, so so my intro will only take a minute or two because almost my entire professional career has been at ValuEngine. I joined ValuEngine in 2000 as a director, and a year later, I'm now president and CEO for the last 22 years with ValuEngine. So we are a quantitative research provider. We crunch huge amounts of financial data, and we'll talk a little bit more about that later on. But over these 23 years, we've developed some great relationships with partners and customers that include some of the largest Wall Street and finance firms worldwide, including brokerage firms, hedge funds, news sources, data firms. These have all been the types of folks that ValuEngine works with and markets and sells all this data to. So that's me, 23 years with ValuEngine, and I will pass it along to Rajesh.
Hey, thanks a lot, Paul. I'll try to keep mine shorter than Paul. So hello, everyone. I'm Rajesh Jain, and I've been doing indexes for the last 15 years, nearly 5 years at MSCI, and then 10 years at Morningstar Indexes. I began my career with punching data and eventually building teams for index rebalancing, corporate actions, handling, project management, and operations. And now here I'm at ValuEngine, helping to build the database system that we have here. And Alex, over to you.
Great, thanks everyone for the introductions. So brief intro from my side as well. I've started my career in the fintech industry, worked at fintech startup prior to starting Index One, but for the last sort of 4 years now, I've been working on Index One, and it's been a delight sort of from the very early stages to where we are now, working on a bunch of interesting use cases, including ValuEngine's project, which we'll get to shortly. Next on the agenda, I'll just give a brief introduction to what Index One is. And so let's get started with that. So a bit about the platform and what we do. So Index One offers an index calculation platform. And the main functionality we cover is index design. So being able to design index methodologies, either sort of market cap based standard methodologies, various universes, either sector filtered or industry filtered, ESG filtered, various permutations of that. And we have quite a wide array of capabilities and ways you can adjust the index methodology based on your specific needs. Beyond that, we were able to provide backtesting solutions. So you can backtest any methodology you've built within or outside of Index One, validate the data, gather the results. And from there onwards, we also cover live calculation, ongoing maintenance, so things like rebalancing, corporate action treatment, and also the dissemination of index data to various types of data providers or websites or external applications. So we're really, in a sense, a full-fledged indexing solution with sort of a tech-oriented approach. A bit about stage we're at. So we calculate several million index values on a daily basis. We're running hundreds of live indices at the moment, and we cover a wide range of securities, and we're able to deliver on index projects in a very rapid way. But obviously, if anyone has any questions about us, you can get in touch with us after the webinar. So now let me hand it over to Paul from ValueEngine to give a bit of an overview about what you guys do.
There we go. I remember to unmute myself.
Yeah.
Thank you, Alex. Yeah, happy to be here. We've been working with Index One for several years now. So I'll just over a couple of minutes here, just 2 or 3 minutes, I'll review what ValueEngine does and why Index One is so relevant to us. So ValueEngine is a quantitative firm. We use a qualitative methodology for stock and ETF research, and we've been doing this for 23 years. So we run some very sophisticated computer models across a whole bunch of stocks every single day. We cover over 4,200 US stocks, over 1,000 Canadian stocks. We cover around 600 ADRs, foreign companies that trade on US markets. We cover around 600 ETFs. That's updated weekly. And we're really applying our stock model to the ETFs. So we know what the constituents are through data feeds, and we assign our stock research values to each portfolio holding in the ETF, and then we're able to evaluate the ETF, almost treating it like a portfolio basically, and assign values to each ETF under coverage. So we produce our core model as a fair market valuation model. That's what ValueEngine feels, or the models feel that a stock should trade at if the markets are perfectly efficient. That valuation, once that model is complete, that the solution or the valuation metric flows over into our forecast target prices. And so that uses the valuation output plus an additional set of parameters to conclude what the models feel the stock actually will trade at in the future. So we're calculating both what we think the stock is inherently worth, and then we're looking at a whole array of market conditions to see what we think that stock actually will trade at in the future, what it should trade at versus what it actually will trade at. And we forecast target prices 1 month, 3 months, 6 months, 1, 2, and 3 years into the future. Specifically, we use our 1-year price target for a strong buy, hold, sell, strong sell recommendations. We distribute all this research through website, raw data feeds, and PDF reports. And then what's most relevant here is backtesting performance for that. But we use a wide array. There's a whole second layer of research that sits on top of the model, where we develop various portfolios or various strategies on how we query the models. So our clients vary from individual investors all the way up through some of the largest hedge funds that exist. And each one has a different need or a different use. So through these different screening criteria or ways that we query the model outputs, we can create very high risk but very high return strategies, all the way down to very low risk, very conservative strategies. We'll be talking about two of the or some of the research, some of the very simple backtests we've done as an example into a more conservative type approach using the ValueEngine data. So the two things that we do, we get data feeds in of raw data. Our systems every day calculate these thousands of stocks and hundreds of ETFs. We save that up. We have 23 years of data. So we have gigabytes of data. And then the second layer of research, how do we use all of that data? And that's where Index One has come in and really increased our efficiency. We used to use a very slow, tedious, accurate, but slow, tedious, and costly process of writing custom computer codes and Excel queries to create a lot of outputs of these data. But Index One is so much more efficient on how we can do. We like to say every backtest answers one question and raises 20 new questions. So backtesting and performance studies never end. It seems like you get a great backtest performance study. Well, what if we do this? Can we increase returns without increasing risk? Or the risk is too high, the returns look great, but we need to bring the risk down. So we have to run an entire new process through the backtesting mechanisms. So this is all the process that we use with Index One over 3 years. Has been growing steadily, our reliance on this. So with that, I'll pass it off to Rajesh, who does a lot of the work for ValueEngine directly with Index One.
Okay, thanks a lot, Paul. I'll be talking about the why and the what, actually. So why Index One in the first place? And to answer that, it's actually a two-pronged challenge that we faced at ValueEngine, and I think it's pretty universal. So first is the choice of weapon to do the backtest. So you, of course, rely on an open source, Python or something, coding language to put stuff together, and then Excel. And for a team size like ours, where it's all chiefs and no Indians, it gets usually a little difficult when something in the code breaks down, or to look under the hood. So that was one in terms of tool. The other thing is data. I mean, anyone who understands what a time series data set is will resonate with this problem. To be able to manage data historically and even ongoing, to apply all the corporate actions accurately, it's a challenge. Like just Paul, what you just mentioned, a backtest solves one problems and opens another 10 other problems, right? So with that, I think Index One not only they have a cool tool and wonderful UI to do stuff. It also allows you to once you are done with your backtest, to bring in different benchmarks that of your choice to kind of do the comparison. And once you're done, you can either go live with the index, or if you still want to look under the hood, or if the performance is not satisfactory, you can take a dump of the data and try and resolve and fix it. The what part. Now, at ValueEngine, we have a series of model portfolios, like thematic, sector-based, or based on the risk appetite of the investors. What we did as a test case for this particular webinar, we picked up two portfolios pretty common with us, the conservative and the moderate one. And well, of course, both of these portfolios have a fair enough sector representation. We do have securities from all these sectors here. The difference between the two is so with the conservative, the screening criteria is a little stringent. We just have a higher end cap, a higher trading daily volume, a higher share price. The company must be paying dividend, and with the trade-off, we eventually get out of this is we get lesser stocks with the buy rating, and of course, because it's conservative, it stands by the name. With this, I will pass on to Alex. Back to you. Maybe if you can help us walk through the demo.
Yeah. All right. Thanks a lot, Rajesh, for that. So, as Rajesh mentioned, we are going to run through a quick demo of what we've done together with ValueEngine. So just a bit of background. What I have on screen here is our index construction tool. We have several different ways you can construct indices, either a rules-based sort of index through our point-and-click interface, We also have an interface to code various systematic strategies in Python, where you can predetermine a rule set around, for example, momentum or volatility protected strategies and long-short strategies. You can run that in our backtest environment and also build live indices off of it. And the third kind of core method is a basket calculation, which is in some ways, the simplest thing, at least in terms of how our tool works, but also a very powerful tool to easily create target holdings or portfolios into actual backtests and live indices. So let me just show you, run through quickly what we did with ValueEngine. So from ValueEngine's side, they have provided us with target holdings. So the file essentially looks much like this. Anyone can create a file like this. You just have target weights for various securities at various points in time. Our system supports different types of file formats, different types of identifiers. And what we're going to do is just run through how we've done this. So I'm going to download this file and upload it into the Index One platform. So the process goes sort of like this. And here we've uploaded the weights. We can see the weightings for each point in time in the backtest. I believe this one has we're just looking at a weekly or monthly composition for the year 2023. We're going to use standard settings in terms of corporate action treatment, no transaction costs or tax, and just run the backtest from here. And as you will hopefully see, backtesting is pretty rapid on our platform. So depending on the duration and number of constituents, of course, backtest might come out very quickly or rather slowly, but usually within 30 seconds or so. And what we can see here, firstly, is the performance of the basket we just uploaded. We can see the rolling volatility. So in this instance, we can see over the course of this year, volatility has gone down as the year has progressed. I think that's roughly in line with the overall market as well. In this table, we can see drawdowns. So you can see maximum drawdown at various points in time in the index history. Turnover. So at each rebalance date, we can see the two-way turnover. So combined buys and sells as a percentage weighting for the index. This is obviously an important metric for if you're running a strategy on this and need to account for turnover or transaction costs. And finally, one more thing I can run through in terms of the results screen is our rebalance statistics. So for each point in time, we can see the weightings. We can see performance contributions from various constituents in the portfolio, turnover of individual securities in the portfolio as well. So our tool basically allows you to go back and forth, try out various different types of compositions, index rules. You can also download the results. And another thing we can do is also turn this into a live strategy. So basically start live calculation from today onwards. That's, I think, more relevant for a later webinar. But yeah, this is pretty much the process we've gone through with ValueEngine. And as our next sort of talking point. I'm just going to hand it over to Herb to talk a bit about the results from this strategy they've built. So over to you, Herb.
Yes, and actually the strategy in question is from a case study motivated by client need. We help consult and provide reports for a number of brokerages that serve registered investment advisors, serves the needs and things that are asked for. In this case, we were asked to devise a conservative and a moderate portfolio using certain restrictions in the universe. Most sort of resemble the set we had to work with, the Russell 1500, top 1500 stocks of the Russell 3000. This is something, putting together strategies and meeting criteria, again, is something I've done very much in my 40 years as a quant. And since we've hooked up with Index One and put our relationship together, and again, they've been very accommodating and quite affordable. Since this has all happened, I've been, basically done unlimited access to do various combinations of the ValueEngine rankings with not only industries and sectors, but other data sets we can bring in, such as an ESG data set we were looking at and things like that. In this particular case, again, Alex showed you how the test went. I was extremely pleased at the results. I'm reminded of Jimmy Rogers once telling me he never met a backtest he didn't like. But in this case, this was actually a lot. Another use that this kind of system can be put as a model for portfolio provider, but with no corporate, no actual holdings we were doing. This has become a very convenient performance measurement system for us. And in this case, these were live portfolios, not just back tested, that were run and managed throughout. And when you have a conservative portfolio, you want something that has less a lower standard deviation, but than your benchmark, and more return ideally. And when you're going for a higher one, a moderate, you would like a higher return and you can tolerate a higher standard deviation. Well, lo and behold, at the end of the day, this is what it is. The actual returns have been the first group, 17.8% and 13.2%. We chose RSP, the equally weighted S&P 500 ETF by PowerShares, by Invesco, equally weighted S&P 500 as our benchmark, because the portfolios we were asked to do are equally weighted and rebalanced, so it made a lot of sense. The conservative, so the results have been there, and as you can see, both the conservative and moderate portfolios beat the benchmark handily, conservative by more than 2 times and moderate by more than 3 times. And again, the volatility of the conservative was a bit less than the benchmark, and the moderate was just a bit more than the benchmark. The associated Sharpe ratios are 1.5 for the conservative portfolio, 1.7 for the moderate portfolio, compared to 0.7 for RSP. So with these very pleasing results, we were able to provide those to the client, and can now continue to provide this performance measurement on an ongoing basis. With that, I'm going to hand it back to Alex.
Great. Yeah, thanks, Herb, for running us through that. So as far as our slides go, we don't anything further to demo in terms of our slides. If anyone has any questions in the audience, feel free to post them. I think there should be a chat window where you can freely write any questions, and we will do our best to answer those. So yeah, whether it's about this portfolio in particular, or about Index One or ValueEngine, feel free to shoot those over. We do have some questions here around. So firstly, what is Index One's data coverage? So I think I'm probably best positioned to answer that one. The main areas we cover are equities and ETFs. Most of our clients use our platform to backtest and run strategies that are either equity or ETF based. We cover end of day data on most global markets. Typically, the coverage is very good and data quality is high as well. So that's good. What else? You say that the portfolios use ValueEngine's ratings. What are they? So I guess someone from ValueEngine's side could probably take that one. Talk a bit about your rating system.
I'm happy to field that, Alex. Thank you very much. The ValueEngine ratings actually the model development goes all the way back to Wharton professors who helped consult on this back in the 2000 up until 2000, and then we revise as needed going forward. They focus on earning streams, earnings momentum, projected earnings. Price momentum is a small factor in it. We're looking at overall valuations. Although you may think it's all about value, it's more value combined with a strong look at the earning streams and the sustainability of those earnings, then relative to the pricing and relative to traditional ratios. And the record of it speaks for itself. Again, we go with 1 is strong buy, 2 is buy, 3, which is most of the stocks, is perform in line with the market, hold, and then 4 and 5 are the sell and strong sells, or if you will, underperform and strongly underperform. I hope that covers that.
Thanks for that explanation. We have another question related to Index One. So besides model portfolios, what other applications can Index One provide? If I firstly, I guess, run through kind of the main use cases we encounter, I think that would cover the most of the question. So we have a few kind of main categories that we get client requests from. So the main one being the passive product space. So indices are used for a lot of different passive products. So ETFs, mutual funds, ETPs, various different index tracker products. Obviously, these track indices, and the correct index might not exist in the market yet. So that's kind of the main point behind our solution, is being able to create custom indices. And these typically take the shape of ESG indices or thematic indices or various systematic indices, and we're able to handle all the maintenance required to run those. So the rebalancing, delivering the data tracker files to the relevant parties in order to manage the running of an ETF. The other sort of main categories we serve are data providers, so providers of any type of ratings, scores, reference data, who perhaps want to give an idea of the type of performance or exposure you can get using that data set. Very good way of doing that is constructing an index or portfolio based off of that data set. That's very much sort of what we're doing here with ValueEngine in some regards. But besides that, we also serve as a platform for licensing existing content. We publish indices on behalf of our clients, which can be viewed on the platform and utilized in various different ways. It's a pretty good research tool as well if you want to create various historical scenarios or run live test strategies. The use cases are quite, I wouldn't say endless, but multiple. So yeah, I think we don't have that much time. I think we can probably wrap up the stream here, but I guess I would urge any viewers or interested parties to get in touch. So if you're interested in ValueEngine, obviously we showed the details on screen, but you'll probably figure out how to get in touch. And same goes for Index One. If you have any questions around our offering or how our tools work, feel free to get in touch, and we'd be happy to have a conversation. So yeah, I think let's wrap it up there.
Great. Thank you, Alex. That was great.
Yeah. Thanks, Alex.
All of the participants.
Thank you, Alex.
All right. Thanks, everyone.
Yeah. Bye.